Getting out of paying taxes, the dream destinations. Ever felt like you're sending a chunk of your hard-earned cash straight to the government? Don't worry, you're not alone. But imagine living in places where income tax is just a distant memory. Sounds too good to be true, right? Well, believe it or not, there are 10 countries around the world that have no personal income taxes, and we can't wait to take you on this thrilling journey to discover them. Buckle up and let's explore these tax-free paradises together, unpacking the ultimate tax-free escapes. Let's dive into our first destination, the Bahamas. You probably already know it for its stunning turquoise waters, vibrant coral reefs, and sun-kissed beaches that'll make your Instagram followers green with envy. But did you know this island gem also offers a tax-free lifestyle? From sailing through crystal-clear coves to indulging in fresh seafood and local cuisine, the Bahamas is more than just a pretty face. It's a haven for those seeking a life free from income taxes. So are you ready to discover what makes this Caribbean paradise an ideal spot to ditch the taxman? Get ready to shake off the tax burden and dive into the laid-back lifestyle that awaits in our next top destination. But before we cruise over to spot number 2, let's make a quick pit stop and appreciate why the Bahamas is a dream come true for tax-free enthusiasts. With no income tax, corporate tax, capital gains tax, or wealth tax, this Caribbean gem relies on tourism and other revenue streams to keep its economy thriving. Less than 20% of GDP comes from property tax, duties, and social security taxes. It's the perfect setting to transform your holiday home into a permanent residence. Now, are you ready to set sail for our next island paradise? Next stop, Bahrain. This tiny island nation in the Persian Gulf packs a big punch when it comes to low taxes. With no income tax, corporate tax, or payroll tax, you'll be enjoying a sweet tax break. And if that's not enough, Bahrain also doesn't have a value-added tax evade policy. But before we get carried away with the tax-free perks, let's keep it real. Bahrain's political landscape and human rights record are complex issues. We're not here to promote a destination without considering its broader implications. If you do decide to pack your bags, make sure you've done your research and consider the bigger picture. Now we're sailing into Bermuda. You might be picturing eerie tales from the Bermuda Triangle or breathtaking ocean views, but hold on to your anchors, we're diving into tax talk. Yes, you read that right. This British island territory boasts an impressive GDP per capita of around 7,000, making it one of the richest places on the planet. And if you're wondering what's behind such wealth, it's not just the scenic beaches or historic lighthouses, although those are pretty cool too. But let's get to the real treasure. Bermuda has a low-tax environment that contributes significantly to its economic success. Bermuda just got even more tempting. No income tax sounds amazing, right? But hold on to your wallets, because while there's no income tax, a 10-year work permit will cost you a pretty penny. A whopping 1,000. Still think it's worth ditching the rent for. Now let's shift gears and set sail for the United Arab Emirates. This Middle Eastern gem is often called the wealth capital of the world, thanks to its super-rich cities like Dubai and Abu Dhabi. With opulent skyscrapers, luxury shopping malls, and lavish lifestyles, no wonder it's a hotspot for billionaires worldwide. But we're not here just to gawk at the glamorous lives of the ultra-wealthy. There's more to ye than meets the eye. Or is there? The U's jaw-dropping wealth, a whopping 9,000 per capita income, is no secret, especially after splurging at those extravagant malls during your last shopping spree. But have you ever wondered how this extreme affluence is maintained? The truth is, the country doesn't rely on individual income tax, which might come as a surprise since everyone else seems to be doing it. Instead, oil companies foot the bill with up to 55% corporate taxes. And if that wasn't enough, we also imposes hefty taxes elsewhere. Think 30% on alcohol and an extra 50% sales tax in Dubai. Time to rethink those late-night shawarma runs. Get ready to dive into the ultimate tropical dream, the Cayman Islands. Imagine swapping your daily grind for turquoise waters, swaying palm trees, and a chance encounter with friendly sea turtles. This stunning destination isn't just a visual feast, it's also one of the world's wealthiest sovereign states, boasting an impressive GDP per capita of 3,800. The cherry on top, zero income tax. You read that right, folks. You can bask in the sun without breaking the bank. So what are you waiting for? Pack your bags and make this island paradise your new home sweet home. But let's talk about the Cayman Islands tax perks. No capital gains tax, value-added tax, or government sales tax means your hard-earned cash stays in your pocket. And here's another bonus: no social security contributions deduction from your salary, because they're not mandatory. That's just more money to enjoy under those stunning palm trees. Now, let's set our sights on Monaco. This tiny gem on the French Riviera is calling your name. As a non-French citizen, you've got a golden opportunity to make it your home, and trust us, who wouldn't want to? Monaco, where the wealthy elite come to play, but it's not all sunshine and champagne toasts. The country's whopping GDP per capita of 132,000 might make you think everyone's living large. But let's get real, with great wealth comes great tax responsibility. While individuals are exempt from personal income taxes, corporations aren't so lucky. They've got a 33% tax rate on the books, unless they can prove 3/4 of their revenue is generated within Monaco's glamorous borders. And if you're a resident, don't even think about splurging. A 19.6% VAT will be slapped onto all your luxury goods and services. Let's dive into the Sultanate of Oman, another Middle Eastern nation ruled by an absolute monarch, where His Majesty calls all the shots. Now, you'd think a dictatorship like this would be averse to taxing its population, right? Maybe it's just good old-fashioned diplomacy. No VAT or income tax for the Omani people, perhaps in hopes that they'll stay happy and avoid any palace takeovers. Oman's got its perks, but let's be real, it's not all sunshine and falconry. The government's human rights record raises some serious red flags, with alleged torture cases making headlines. On the flip side, you'd better believe those taxes will add up. Social security contributions alone are 6.5% of your monthly take-home pay. So if Oman's not calling your name, let's hop to our next destination, Sark, a teeny island in the Channel Islands with an intriguing name that's almost as mysterious as its history. Ditch the time machine blueprint. Sark's got a revolutionary offer for you. This tiny island has turned back the clock in its own way. It's one of the last car-free zones on Earth, where tractors and horse-drawn carriages are the only mode of transport. But the real-time capsule lies in its tax system: no income tax, capital gains tax, or inheritance tax here. And to top that off, Sark is a VAT-free zone, making it a haven for your wallet. Let's take a trip to Brunei, where progress meets heritage. Did you know this tiny Southeast Asian nation boasts the second highest human development index in the region, just shy of Singapore? It's officially a developed country, and that's no small feat considering it only broke free from the Aki's rule on January 1st, 1984. Talk about making up for lost time. But enough about being tax-free paradise, let's dive into some real benefits. Brunei offers a dream life for many: zero income tax, no sales tax or VAT, and even no social security taxes. Just imagine sipping coconut water on the beach with your wallet still full. Now that we've indulged in Brunei's tax haven, let's shift gears and explore Kuwait, where east meets west in the heart of Arabia. Get ready to discover how the world's 6th largest oil reserves power this Middle Eastern gem. Let's cut through the myth. Being an oil-rich nation under a specific government system does bring some tax benefits, but it's not all sunshine. Kuwait, for instance, doesn't charge personal income taxes. But there's a catch: you'll contribute 7.5% of your salary to Social Security, so that's still a dent in your wallet. The oil wealth is indeed impressive. It covers almost half of the GDP, giving each Kuwaiti citizen a staggering $8,000 per year. But did you know that only 1 in 14 Kuwaitis works outside of government-owned and managed oil companies? This unique mix of oil wealth and social dynamics makes Kuwait an interesting case study. Now that we've explored these amazing tax haven countries, who wouldn't want to move there? Share with us in the comments, which one would you choose? Don't forget to hit that subscribe button if this video got you thinking about your financial future. And while you're here, give our other videos a watch and let us know what you think. You can also connect with